How to read COT.
Here's something that might surprise you. In the trillion-dollar Forex market, over 90% of retail traders consistently lose money, while big banks rake in billions. But what if there was a way to peek behind the curtain at what these financial giants are doing?
That's quite the revelation. It really shows how tilted the playing field is for regular investors.
Well, think of it like a massive poker game where some players can see everyone else's cards. The big banks and hedge funds have access to incredible amounts of data and resources that retail traders simply don't.
So, how do regular traders even stand a chance in this environment?
That's where something fascinating comes in: the commitments of traders reports. These weekly reports essentially give us a window into what the major players are doing with their money.
Hmm. Tell me more about how these reports actually work.
So every Tuesday evening, major financial institutions have to report their positions to the CFTC. That's the Commodity Futures Trading Commission. Then on Friday at 3:30 p.m. Eastern, this information becomes public, showing us roughly 70 to 90% of all open positions in futures markets.
But if we're talking about Forex trading, why should we care about futures market data?
Well, here's the clever bit. Spot currency markets and futures markets are like synchronized swimmers. They move together so closely that understanding one gives you insight into the other.
That makes sense. So, who exactly are these major players we're tracking?
There are three main groups. First, you've got the commercials. These are typically large corporations that use futures for hedging. They're often called the smart money because they tend to have the deepest market understanding.
Oh, like companies that actually need these currencies for their international business operations?
Exactly. Then you have the large speculators, hedge funds and trading firms that are purely in it for profit. And finally, there's the small speculators. That's retail traders like you and me, who don't even have to report their positions.
You know what's interesting about that? It's almost like having a map of the battlefield before entering the fight.
That's a great analogy. And here's a real world example. Look at what happened with the Canadian dollar in 2016 and 2017. Commercial traders took massive long positions at two different points, and both times it preceded major upward moves in the currency.
So, if someone had been watching these reports, they could have potentially positioned themselves alongside these major players?
Yes, but, and this is crucial, it's not about blindly copying what the big players do. It's about using this information as part of a broader analysis strategy.
How should traders actually implement this information in their trading?
The key is focusing on longer time frames, daily or weekly charts, rather than trying to day trade with this information. You want to look for extreme positions, especially when there's a big gap between what commercial traders and small speculators are doing.
That's fascinating. Where can traders access these reports?
While the raw data is available on the CFTC website, many traders use more user-friendly platforms like barchart.com that visualize the data. These platforms make it much easier to spot patterns and trends.
So, what would you say are the most important patterns to watch for?
Look for extreme positioning, especially when commercial traders take large positions against the current market trend. Also, pay attention to significant divergences between commercial traders and large speculators.
That really helps put it in perspective. It's not just about following the big players, but understanding the whole context.
Exactly. Think of it like putting together a puzzle. The COT reports are just one piece. You still need technical analysis, fundamental analysis, and market sentiment to complete the picture.
Before we wrap up, what's your key advice for someone just starting to use these reports?
Start by focusing on identifying extreme positions in markets you already understand. Don't try to trade every signal. Wait for those moments when multiple factors align. And remember, this is just one tool in what should be a comprehensive trading approach.
That's really valuable guidance for anyone looking to enhance their trading strategy.
And here's the final thought. In trading, like in life, it's not just about having information, it's about knowing how to use it effectively and responsibly. The COT reports give us a glimpse into the minds of market giants, but it's up to us to use that insight wisely.